Have you ever watched a stock price jump in the morning and crash by the afternoon and wondered who is pulling the strings? The truth is, it's not some secret committee, it's you, me, and millions of other investors. In this video, we will break down exactly how stock prices are set, what really makes them move, and how you can make sense of it all. Before we dig deep into how stock prices are set, let's first understand what a stock really is. A stock is a short form for stock certificate that proves your ownership in the business. It is very much similar to a title of a car that proves your ownership of the car. Similarly, a stock certificate or short form stock proves that you are a part owner of the business. Let's take an example. This slide is from Walmart's earnings presentation that was released on August 21st, 2025. If you see under year 2025 column, the count of outstanding stock is around 8 billion, which means the ownership of the Walmart is divided into 8 billion pieces of stock certificates. Before computers, the stock certificates were paper based. Now they are all electronic. When you purchase a stock, an electronic entry is made in your brokerage account. Stock prices are set in the marketplace, just like the prices of fruit in farmers market. If more people want to buy than sell, the price goes up. If more people want to sell than buy, the price goes down. In the stock exchange, buyer places a bid and the seller places an ask. In this picture, as you can see, the buyer's bid is $10 and the seller's ask is $12. If no one blinks, the trade does not happen. However, generally one or both of them blink, meaning they change their prices. That's part of negotiation. For example, let's say buyer increases the bid to $11 and the seller is okay to accept that price. This allows trade to happen. Now the stock ownership is transferred from the seller to the buyer. So what makes buyers and sellers change their minds? Several forces at play. For example, company performance, earnings, sales growth, new products. If there is a positive development in company performance, more people would like to buy the stock. Hence, the price goes up. All investors want maximum return for their investment, so they are trying to buy companies that gives them more returns. The opposite is also true. If there is a negative development, the price goes down. Economic news, interest rate, inflation, unemployment, all this has an impact on stock prices. Market sentiment. If people are happy and feel good about their financial situation, they pour money into the stock market, which drives prices up. When they panic due to some negative development, they want to get out of the stock market, which causes stock prices to fall. If a big investor like pension fund, hedge funds, etc. buys a large block of stocks, this causes the prices to go up. The opposite is also true. If they are selling too many at once, this creates more net sellers in the market than buyers, which causes the stock prices to go down. Summarizing what we just learned, regardless of the positive or negative factors, the stock prices follow a supply and demand relationship. If there is a lot of demand and very limited supply, meaning there are more buyers than sellers, the stock prices go up. However, if there is a lot of supply and very less demand, meaning more sellers than buyers, the stock prices go down. A common myth. The company itself decides the stock price day to day. Nope. Once it's public, the market decides. The company only influences it indirectly through results and announcements. Let's recap what we learned in this video. We learned what a stock is. We also saw examples of a stock count by using Walmart as our example. We learned what a bid and ask is. We learned factors impacting stock prices like company reports, economic news, market sentiments, and big trades. So, next time you see a stock price move, remember it's the sum of millions of tiny decisions made in real time. Now that you know how it works, you are better equipped to make your own smart moves in the market. If you found this video helpful, please hit like, subscribe, and share. If you have any questions, please ask them in the comment section below. I will try to reply to as many comments as possible. Thank you.